we will delete those. But other than that, use the chat to socialize, interact, and so on. If you can't see the full event, we will post a recording of this by email, and you can always subscribe to our YouTube channel as well. The link to that will be posted in the chat. Now, the last thing that remains before we can fully kick off is I need to read the following disclaimer. The content presented today is not directed to any investors or potential investors and does not constitute an offer to sell or a solicitation of an offer to buy any securities. And with that being said, it's my great honor to introduce our panelists for today. We have Martin Tobias, Nisha Desai, and Melissa Lee. Melissa, why don't you start out by introducing yourself?
Yeah, absolutely. Super thrilled to be here, Nils. Thank you for that introduction. I'm Melissa Lee. I'm an investor at Offline Ventures. We're a San Francisco-based venture firm that does direct investments as well as fund-to-fund investments, relatively generalist. And climate is one of the things that I've been looking at both on the direct investment side and fund-to-fund side. So really thrilled to be here and to share more.
Thank you. Martin?
Hi, I'm Martin Tobias. I went through the Desai program as a GP, so I speak very highly of it. I love the software. So I have a venture fund. I'm a pre-seed investor doing B2B software investment, but I'm also an LP in 17 funds, 2 of them climate tech funds, and I was the founder of an energy or climate tech angel group in Seattle called Element 8 that has deployed over $50 million into climate tech investments.
Very interesting. Lastly, Nisha? You're muted.
Hi, happy to be here. Thank you so much for the invitation to participate on the panel. Really appreciate it. My name is Nisha Desai. I am the founder of the Intention Climate Fund, which has really been focused on democratizing climate impact investment and making this asset class more available, more accessible to individual investors. So long background as an entrepreneur, mostly in clean energy and alternative energy for kind of almost 3 decades. I also serve as a board member of Greentown Labs, which is the largest climate tech incubator in the country.
Thank you, Nisha. So yeah, question for everyone really. So this is a field that is like rapidly evolving all the time. What are some of the like current trends that you are interested in when investing in climate tech? Feel free to answer.
I can start. I actually forgot. I was the founder of a climate tech startup too. I founded a company called Imperium Renewables. We built the biggest biodiesel refinery in the world. So I was heavily involved in what was called Climate Tech 1.0, which is kind of back sort of 2004 to 2006. And that phase was really driven by the increase in oil price and the scarcity of peak oil and all of that stuff. Oil went from $40 a barrel to $140 a barrel. So it made a ton of economics in, especially in renewable fuel, things like ethanol and biodiesel, to make a lot of sense. But those industries were also a lot of associated with a lot of subsidies. The wind subsidies were on again, off again. The biodiesel subsidy was on again, off again. And frankly, not a lot of people made a lot of money in Climate Tech 1.0, mostly because the regulatory environment changed quite significantly and was quite erratic. People's, dependency on subsidies that could come and go was hard for investors to plan for. What I think has changed in the last sort of 5 or 10 years, and why we're seeing a Climate Tech 2.0, is that you now have lots of international agreements with higher climate goals and corporations that have made long-term climate investments. You've also seen the cost of some of these technologies come down to be competitive even without subsidies, including things like solar. And so we're at a point now where the economics make more sense and subsidies are less important, but the regulatory environment driving companies and people is more stable. And that's why I think we're seeing a huge resurgence in interest in climate investments.
Okay, very interesting, Martin. Is that something the other panelists are also seeing? Like how is climate tech 2.0 different from the first iteration?
Well, if I could chime in, so like I've been involved with alternative energy for like a long time. I mean, I was working on energy storage back in 2002, and so what I've really witnessed for much of my career is just the massive growth in renewables, and I think that one of the things that's really, really different about climate tech today is that it's much broader than simply renewables. So renewables back in the day, was most, as far as kind of newer stuff coming onto the market, was wind and solar. In this country, there was definitely on and off again policy. If you look at it from a global perspective, I think you can see that there's probably just like it kind of inexorably increasing kind of global demand for renewables, particularly coming from Europe. I think, at that time, in the mid 2000s, kind of Europe had much stronger policy support for renewables and much more demand, and frankly, that was kind of a solid buffer for any kind of ups and downs that we were experiencing in the United States. So moving beyond renewables, I think, is a big trend. I think the concept of climate so it's not just energy, it is the climate. It's a lot broader than simply the energy industry, although energy is, kind of 75% of the problem, right? And so there's still a huge amount of climate technology, which is very focused with the energy industry. I think that there's much more global consensus around climate and decarbonization. Back in the mid 2000s, the oil and gas industry was not agreeing that, yes, excess carbon in the atmosphere is a problem. Today, they are agreeing it is a problem, right? They may disagree about what to do with respect to the solution, but they are actually in agreement that it's a solution. I live in Houston. Houston has for a long time undeniably been the oil and gas capital of the world. And, in the last 5 years or so, even the Greater Houston Partnership, which is effectively our Chamber of Commerce, is like, we're going to make Houston the energy transition capital of the world. So, okay, even though they don't necessarily want to use the term climate, right? But the fact that they are saying, yes, okay, there is demand for low carbon solutions for decarbonizing, and we want to be part of the solution. So I think that these are kind of fundamental changes that really create a much more fruitful environment for the innovation that is still absolutely needed.
Very interesting. Thank you, Nisha. Melissa, do you want to weigh in on this topic?
Yeah, absolutely. Couldn't agree more with everything Nisha and Martin just said. When I think about the venture landscape for climate tech now, I almost see it as like bits and atoms. And I think the atoms piece has become increasingly compelling over the past couple of years. And I think this is sort of keeping in line with venture more broadly moving towards themes of like American dynamism and sort of hardware and like adventure capital. And so sort of looking at like the hardware bucket, one of the things that I'm thinking a ton about is like nuclear energy as a source of really powerful clean energy. Obviously, like historically, the US had this incredible head start coming into the 70s, sort of beladen with regulations. But there have been a bunch of countries that have shown that, going nuclear can be done and safely. I think France in 2022 did something like shut down all of its coal plants and become fully renewable as a country. And a lot of that was fueled by nuclear, which I think is a really fantastic example of where the US can continue to push for energy innovation. And likewise with Canada too. And then, on the bid side of things, like there's been so much talk obviously around like AI for grid management and optimization to avoid blackouts in places like Houston and Texas, where there's a really high cost to human life and obviously financial cost as well with every successive blackout. And then, at the software level, there's obviously things like tracking carbon capture. And carbon capture is really interesting to me because it seems to be like the one metric that is really provable from an ESG standpoint. And I think it's the one quantifiable unit that is relatively well understood by most. And so a lot of the conversation has been around carbon capture. And so there's obviously like a sort of a growing ecosystem and platforms that support carbon capture technologies. And so that's sort of the broad themes that I've been thinking about. But personally, I'm really leaning towards, more of the atoms piece. I think that hardware is difficult, but there's a lot of really fantastic innovation coming out of the hardware space that we can chat further about that I just get really excited by.
Yeah, I maybe want to quickly zoom in on that a bit. You said hardware is difficult. A lot of these things, like they're deep tech, they're hard science. As an investor, it's not always easy to evaluate, like, okay, is this a thing that will actually work? How do you think about building a team around you to help you vet opportunities? Like, has that been important for you as an investor? And can you share a bit more about that?
Yeah, absolutely. I mean, certainly having the right technical advisors or folks in your network that you can sort of lean on for DD is often helpful, just having an external perspective. Because we're a relatively generalist fund, we get in the business of having to learn about things very, very quickly and just being open and receptive to new technologies. But there are obviously experts that have spent decades and decades diligencing technologies and climate tech that we tend to lean on. And so really leveraging friends in the industry. But I also think, in this era of climate tech 2.0, we're seeing a real focus on sort of the hard science. And I would say anecdotally, this has come out of the SPAC boom of 2020 to 2021, when there were a lot of electric vehicle companies and battery companies that looked to SPACs as a very quick road to liquidity when they couldn't raise capital on the venture side of things. And that was because with SPACs, you could tell a better story with your filing documents in a way that, you're limited from making those forward projections too much when filing for an IPO. And so there's a real focus on the science now. And so that piece is really important to understand. But I mean, some of the other things that I look at when I diligence sort of deep tech or climate tech companies are, do I think this founder has really incredible storytelling skills? There is this notorious phenomenon known as the Valley of Death that tends to happen at Series A or B for deep tech startups, where, maybe setting out at pre-seed or seed, the founder wasn't intentional enough about what are the milestones they need to reach with every successive fundraise before they get to commercialization. And sometimes that road to commercialization is a little bit too long. And then Series A/B is this awkward place in which they don't have enough traction to be near commercialization, but they need more funding to do that. So it's sort of this catch-22. And the way around that typically has been really excellent storytelling skills on the part of the founder that can sometimes negate having a lack of traction, compared to your software businesses, for example. But I would encourage founders to almost think of every successive fundraising as a game of card flipping. What are the metrics or milestones that I need to reach before I go out and raise a fresh batch of funding? And I always feel a lot more compelled around, an opportunity when I see that the founder has been really intentional around I'm going to do my next raise in the year 2025 or 2026. And this is exactly where I need to be before I get to that place.
Right.
And also knowing where that funding is going to come from. Are they going to go talk to angels or strategics, for example?
Right.
And then, your other things would be cost efficiency. Do I think the founder is spending a ton of money, even at Series A, still trying to validate the science? Or are they nailing down contracts and they're really beefing up the sales function? And then road to profit and, the ability to scale is something that I look for as well. But all of that sort of good science is table stakes. That's all predicated upon good science.
Yeah, thank you. That's very insightful. Nisha, Martin, how's your approach to due diligencing deep tech?
So I'll say, for me, it's very much about kind of people in the network, right? I have the advantage of, having had a lot of professional experience in the energy industry. So, not only do I bring a personal network, but then, what I have been building with respect to the Intention Climate Fund is really, attracting a lot of people who are experts in their field and who, want a chance to, participate in sharing some of that knowledge and putting it to work in different ways. Through kind of connections with the ecosystem as well, certainly being a part of Greentown Labs and having an advisory group that's deeply connected into other ecosystems, that just provides leverage and a network for finding other people who have particular skills. I think at the end of the day, we're a pretty small fund, so we also have to kind of be mindful of a little bit of art and science. There's actually, my perspective with some of the type of climate technologies that we're looking at is they all work, right? Or they all could work, and that there are some that are when you invest in software, there's an expectation or a need to kind of go get something that's 10 times better, so it's very clear to win, right? I think when you're investing, for example, in things that are related to climate, all right, so the next hydrogen electrolyzer, for example, is going to have an X% improvement, but the improvement might be that it allows for a more flexible feedstock, or that it can be located in different places, or that it can operate at smaller scale. And so how it wins isn't as much a function of the technology, but a function of kind of how that team can be supported and develop the skills to do other things, right? And it's not just storytelling, it's not just sales, it's systematic de-risking through, kind of leveraging project finance, project development capabilities. Ultimately, for a lot of things that we look at in climate, they're going to be selling in, when they're successful, when that technology is fully commercialized, they're selling into a commodity market, right? So, eventually needing to be able to develop the skills over time, not necessarily on day one, but kind of having a roadmap and a path to building in the skills and capabilities that are needed to play in a pretty low margin commodity environment.
Yeah, so both of you are sort of saying it's not just about the tech, but everything else around it, how people actually market it. And Martin?
Yeah, I wanted to echo something that Melissa said. Having a great CEO that can tell a story, especially in climate, is really important. Exhibit A is Tesla. I remember driving in the first Tesla when Martin Eberhard was running it, and Elon Musk didn't start Tesla; he was an investor. Martin could not tell a very good story. He had a hard time raising money. Elon Musk raised a giant pile of money because he's an amazing storyteller at a very early stage. But what I'd like to talk about a little bit is, as an LP, how I would diligence a fund investing in climate tech. And I would look for two things. One is some proprietary or unique network or flywheel of access to deal flow. For example, I'm an LP in the Element 8 fund, and Element 8 is an angel network that has like 60 people in Seattle, all invested in climate tech. So they have sort of a good deal flow network and a good diligence network to make the decisions themselves. So rather than me diligencing a specific technology, I'm trying to pick a manager who I know has a network of good deal flow and good diligence upon which to pick from. But the second thing I would look for in a manager, and that gets to something I think both of them said, is their ability to get that follow-on financing. That's especially an incredible risk in a small climate tech fund, because to the point other people have made, most climate tech investments require a lot of capital. And let's say you have a small fund, a $10 or $20 million climate tech fund. If you're putting $1 million into something and it takes $20 million before it gets to market, you may not be able to get anywhere with your $1 million. So what I want in a manager is somebody that understands the stage they're investing in, but is also connected to those follow-on potential funders and knows those people. For example, in my work as a GP doing B2B software, one of the criteria I have in a pre-seed is if I don't know 3 investors that I will call if this company meets their objectives in the pre-seed, that I know are investing in this category, that I know their traction metrics, that I understand the KPIs they will be investing on, I do not write the pre-seed check. And I would look in a climate tech manager, or a manager who understands that too, understands that the money they're giving them early is not enough, and they have to have that network of follow-on financiers, especially in climate tech, because they require so much more money to get to market.
Yeah, so from what I understand, all of you have said like it's very important for there to be a story of how does this company get to the next round. Like, yeah, that's interesting. So you've mentioned storytelling a number of times now. As an investor, and when talking to other investors, like what story do you tell others, and like why should you have like climate in your portfolio?
Yeah, happy to jump in here. I sort of think about this question as like there are 2 big calamities that we know are kind of inevitable in our lifetime. The one is like it's first one is like it's almost certain that we'll get another worldwide pandemic. You know, knock on wood, we won't, but like we probably will. And then the second is that you know, climate change is coming for all of us, and that's just an inevitable reality that we have to deal with. And one seems to be a longer term existential crisis, and the other one is obviously shorter term. But with climate, you know, there are really incredible ways of getting ahead of that, both by working within the existing infrastructure, but also innovating in new systems. And so it's a question of like optimizing the resources that you already have, but also creating and innovating in brand new energy sources. And that's a piece that I get really excited about. And this is a little cliche, but I think generally, you know, as VCs, as capital allocators, there's an incredible amount of good that you can do when you put your money where your mouth is. And you know, you're financing really incredible founders who are doing everything they can to make the world happier or healthier or safer or whatever it is. And I think climate is really integral to like every person, right? It's sort of non-discriminating, it affects all of us. And so it's something that I care deeply about.
Thank you, Melissa. Nisha or Martin?
I think for me, I kind of flip the storytelling on its head. So there's 2 types of kind of investors, or at least for the ones that we're interacting with. There's a group that for whom their interest in climate is really about, you know, it's purely profit driven. It is, look, this is one of the big themes. There's a fundamental remaking of the global economy. There's opportunities here, and they just doing it to make money because it's the latest hot thing. There's another group who are deeply concerned about climate, and they've had very little opportunity. I mean, they want to align their investments with their values, but they also want to have their investments actually have impact. They want to have impact as an investor. So it's not just values alignment. And the way I will, you know, the example I would usually use is like, look, if you're purchasing Tesla, you're not investing in Tesla. You're basically you're buying that share off the previous investor in Tesla. So you're not enabling Elon Musk to do something with the dollar that you put into the Tesla stock, versus investing in startups or kind of through private markets intentionally, you know, finding something with impact where you can be part of the solution creation, finding people who kind of really resonate with that, but then also want to do it not in a philanthropic perspective, but in a way that makes them money as well. So those are, but they're 2 very distinct camps, and the storytelling for each is different.
So is it correct if I would say, like, if you want to be more of an activist investor, your buck gets a lot farther if you do it via venture than public stock market, and that's like a huge incentive for a lot of people.
Yeah, absolutely. Absolutely. I think we can look at, you know, kind of activist investing strategies through the public stock market, and there's not very much that it's hard to create intentional climate impact through those strategies.
Right. The scale is so massive that it's hard to get hurt. Yeah, no, I get it. Thank you. Martin, do you have anything you want to add on this topic?
Well, you know, just going back to my comments on the difference between sort of climate tech 1.0 and climate tech 2.0. In climate tech 1.0, there were lots of people that were sort of passionate about the idea, but the economics didn't work that well. And we're at this time now where there's an intersection of being able to make a profitable business and to, you know, reach some philanthropic or, you know, personal goals that you want to do. Those two have intersected in a pretty interesting way, which is why I tell people that you can do both today. You're picking the right thing. And I also do agree that it's better to you know, invest in something at the venture side, because that money's going to go into actually developing new technologies versus the public side, which is, it's just going to go to other shareholders.
Okay, no, that's a good point. So yeah, a lot of predictions about climate are obviously dire, but at the same time, there are some rays of light. I guess we are producing the most clean energy than we have been at any point in history. Are there like any other pieces of data that any of you are optimistic about right now?
Well,
I can
one thing I'm optimistic about, and this does go back, I guess, a little bit to Tesla and the difference in electric cars. So I wrote this piece for the Strategic News Service called From Bits to Barrels, and it was about all the people moving from software to climate tech in the mid 2000s. But what Elon Musk did, and the approach that worked, is he used first principle thinking and just said simply, let's look at the thermodynamic efficiency of an electric motor versus an internal combustion motor. You know, internal combustion motors are something like 20% efficient at converting their fuel source to forward power. Electric motors are something like 90% efficient at converting electricity to forward motion. So just looking at the fundamental thermodynamics of a particular system, you're like, the electric is better. And then all the question is, okay, how do we get electric production up and costs down to where everybody can afford it? But there are, I think that what I am looking for in an entrepreneur or in a VC are people that are using that sort of first principle, basic chemistry, bottoms up approach to identify opportunities that need to be scaled in order to provide value. And that first principle thinking is something that's possible today. I looked at a company that was sort of tangentially in climate tech, but it was creating new materials, new novel materials that had certain properties that would benefit the environment, either better thermal efficiency or better carbon capture, stuff like that. But anyway, they were doing all of this analysis using AI, combining the periodic tables in different weights to invent new materials that had different thermodynamic properties. But that was like a needle in a haystack exploration project that was impossible to do with humans, but is really easy to do with AI. And so I think we're at a time now where we've got some fundamental tools that allow us to do that first principle thinking at a scale that was not possible even 5 years ago. So for example, looking at all the billion possible combinations of the periodic table to make a new material, was not
Mhm.
possible with scientists in a lab. It is possible with an AI simulating those properties. So I think we've got tools today that are going to allow us to do that first principle approach to solving some of these fundamental problems in climate that are really exciting for me.
Okay. Nisha, you want to weigh in on this as well?
Yeah, so for me, like the thing I'm very optimistic about, like, is public sentiment, and I'll share, just something I read yesterday, which I'm very excited about. So I'd mentioned I live in Houston. Like, there's a survey done that said that 90% of the people in Houston want Houston to lead the energy transition. And I think this is so important because it's really necessary to get the incumbent players, and frankly, a lot of Houstonians are, affiliated with the oil and gas industry. It's really, really important to get them to be part of the solution development, the solution purchasing, and I think that can help to create a better policy environment in the longer term for what needs to happen. And I will say, and this is just someone as a, one of the fundamental problems that we have with climate is the reason we have a climate issue is because we've got unpriced externalities, right? We've got carbon pollution that has no cost. There's a cost to society, but not to, the entity that's producing that. So for as long as we have unpriced externalities, we need to have kind of, some type of policy support to counteract, right? Whether it's regulation or, carbon tax or, particular incentives. And so very much, I think, part and parcel of developing solutions, it's not just technology, but also having, supported policy as well. And policy can be shaped. So some of the effort needs to go into shaping policies in a direction that it can support technologies, take advantage of technologies, and create space for market mechanisms to take over.
And in terms of public sentiment, I guess a lot of it is also people thinking any measures will cost them money, as opposed to like what all of you are doing here is like you can also make money by investing in the climate and averting future disaster. Yeah, Melissa, are there any things you're particularly optimistic about that you want to share with the panel?
Yeah, happy to jump in. And Nisha, I suddenly thought of, like, because of the Houston connection, there's a company called Base Power Company, distributed batteries, powering a bunch of homes in regions of Texas to prevent blackouts. And I just figured Texas to Texas could be really interesting.
Yeah, they're based in Houston. I think they just got an investment from MCJ.
Yeah, exactly. Yeah, no, I love that company. And we're not invested, but I wish we were. Things that I'm optimistic about. I mean, I think there's like no better time than today to get into climate. I think there are really, really incredible tailwinds in just how founders can tell their story. Like, there's really no more critical point in history than now to be doing climate tech. I mean, I think about how electricity demand in the US, I think, increased last year for the first time in 20 years. And a lot of that is because of data centers and the compute to power a lot of the digital tools that we use today. And so we're sitting at this really interesting juncture of, like, like massive data centers, and that's really bad for like electricity demand, and that that creates a whole strain on the system. But then on the flip side of things, like, how do you leverage AI to optimize grid management, for example, or to manage existing systems? And so there's sort of like two sides of the coin, and I think there are really interesting stories to be spun up around that in this point in history. And just the fact that, like, the US household needs more energy than ever, I think, is a really compelling stat for founders looking to get into climate tech. It's a real problem to be solved.
Thank you for that insight, Melissa. We're going to start taking some questions from the chat. As always, feel free to enter your questions in the chat and upvote whichever ones you find most interesting. Let's start with a question from Mehmet. What geographical regions do you see as the most promising for climate tech innovation, and why?
I don't have any particular geography. I would say Melissa, I think Nisha mentioned that Europe was ahead on climate tech. I think they still are. But I also think it's super interesting in the third world to do some things. I mean, solar is getting adopted in places like Africa faster even than some places like America. So I think as long as there are different opportunities in different regions, and I don't think anyone is any better. I think America is certainly better than it was in the mid-aughts in terms of underlying regulatory support for these kind of technologies.
Right.
Yeah, I'd say from a geography perspective, I don't really think about geography that much when it comes to innovation, except like, at a high level, there's kind of innovation clusters. If I usually think about like climate tech and geography, it's usually really in the context of deployment. And yes, we need deployment everywhere, but particularly in the global south, there's just massive need and opportunity for deployment. I spent a year on the board of a power company in Puerto Rico, and that was I happened to join the board a month before Hurricane Maria flattened the island. And let me tell you, it was just like, if there is any time for distributed energy solutions and solar and lots of energy efficiency and lots of other resilience, energy storage, resilience technologies to kind of have its moment, that would have been it. There's a lot of other issues, policy, politics, etc., that continue to get in the way, but there's just so much opportunity for deployment of technologies that already make sense to have a bigger market and to penetrate if we can get the right financial models in place.
Right.
Yeah, and happy to jump in here as well really quickly. Couldn't agree more with what the others have said. I think there's also a really interesting intersection emerging between like climate tech and sort of dual use. You think about like satellite imaging to predict or monitor unfolding weather disasters or to monitor climate from space. That's really interesting, but also there's a lot of like national security implications tied up with that. Like anything climate meets dual use, you want to be US manufactured, US domiciled. And so I think there's a real opportunity now for like American founders to really step up in this area, and I get excited about that.
Thank you, Melissa. Moving on to the next question from Emil. Given capital intensity combined with a longer time to market for non-software climate investments, do LP's performance expectations of the climate tech focused funds differ from those of software only focused funds?
Yes, the returns are lower.
Okay.
That's my expectation. I hope it's not the case, but the climate funds I'm in have a lower IRR than my software funds. You're not gonna break that.
Agree. Very, very hard to break past software.
But I imagine there's a lot of software solutions in this space as well for people to invest in.
There are some software solutions, yeah.
There are, but like if for people who are truly interested in climate, right? I mean, you've got to get the hardware in there. You've got to get the hardware in there. I am kind of curious if you wouldn't mind if I could just ask a kind of follow-on question with respect to the funds that are focused on hardware. do you find they have a different portfolio construction or kind of, in terms of expectation of outcomes for deals, right? The typical software VC, you've got, one unicorn, a handful of couple of unicorns to pay back the fund. Everything else could be almost a total loss. Do you see funds perhaps with expectations of more, 5 to 10xers, but a higher rate of success?
I don't know. None of the funds I'm in are long enough to know the ultimate mix there. I would expect more singles and doubles, versus a software fund. I made an investment in 2019 at a $19 million valuation. 2 years later, the company raised at a $13.8 billion valuation. I was 240x up in 2 years. That has never and will never happen in climate tech, ever. I don't care how, hard you try. So I think the fundamentals are just very, very different. In my own LP portfolio, my climate tech funds, the funds are too early to know whether they're making their returns on 5 to 10x things. There are so far in those funds not one unicorn.
Okay, thank you, Martin, for those insights. Melissa, did you want to add something there?
Yeah, briefly. I mean, I just see climate-centric fund managers tend to reserve more of their fund for follow-on, just because by virtue of the vertical, like funding rounds are so massive that if you're investing 500K at pre-seed, you're going to be diluted out. And so there's just more awareness around where are they putting their ownership dollars, and how are they sort of doubling down on their investments.
Thank you. So Kiba is asking, what are your thoughts on sustainable building materials such as green cement and eco-friendly panels? Does anyone have any thoughts on those?
So I saw a couple. Green cement's one of those great fucking white whales that people have talked about in climate tech for 20 years. I saw one 15 years ago that was supposedly a climate negative cement. One of the challenges you have in building materials is, in particular, is that your thing might work. You might be able to make cement. The problem is that is the inertia in the industry and the industry's desire for long-term results. The way cement is made today, some Roman cement is still sitting on roads, 3,000 years later. Right. And the core problem with some new cement is what's it going to be like 100 years from now? I'm building something where I have a warranty as a builder or something like that. And some of these things that are super core fundamental things like cement, I think it's going to just take a long, long time before people will trust the efficacy. You won't know if your cement is any good maybe for 50 years until it sits there for 50 years and doesn't degrade like the traditional cement. The risk of somebody implementing that in their project and taking that long-term risk is just too high. So it has to be mitigated with some regulation or some other financial incentives or cost or something like that. If you're changing something fundamental like cement, the biggest gating factor is not whether your technology, whether you could make the thing, it's whether people will trust to adopt it and integrate it into something that has to stand for 50 years.
Right. If you build a skyscraper with unproven cement, the surprise.
If the thing falls down 20 years from now and it's your cement, and the problem is, again, it's with many of these climate tech things, a lot of times it's not the technology invention, it's the business model. For example, I learned early in wind energy. I hired a guy who used to work for GE. And why does GE control a huge percent of the wind turbine market? It's not because they have the best technology. They actually bought their turbines. It's because when you build a wind turbine facility, you're typically signing a 10 or 20-year power purchase agreement from a buyer of that. And the supplier needs to provide a equally as long warranty for the wind turbine of 10 or 20 years. A startup that's venture funded, it's impossible for them to provide a credit-worthy, underwritable 20-year warranty. There's one company that can do that, and that's GE, because they have the balance sheet. So it turns out that whether if your wind turbine is technically better than GE's, but GE can provide a warranty that matches power purchase agreement, GE's going to get the sale. So there are many things like that in climate that relate to underwritability of long-term projects versus the technology itself.
This actually ties in quite a bit with Angelo's question here, who's asking, what's your take on the role of both finance and insurance and climate solutions and the lack of innovations in this space?
I think insurance plays a huge role, right? So I used to be at a solar development company, and one of the things that we were doing, because again, we were a startup, so the technology that we were trying to commercialize and bring to market, we didn't have the balance sheet to provide those warranties. So we were actually working very closely with the insurance companies for them to create essentially a technology insurance kind of a risk product that could essentially make up for the fact that we didn't really have a balance sheet to support kind of the long-term warranties. So I know that there is some work being done with the insurance companies to kind of foment a little bit more of that type of innovation. I think in New York, I think maybe it was a couple weeks ago, there was a specific meeting or event that NYSERDA was involved with as well, to try and kind of develop new products in the insurance industry that would help to mitigate climate by, again, providing these complementary type of solutions. So there's not enough there, but there's definitely some people working on it. And I think it's also a great example, though, of where, again, some of the incumbents have some roles to play. It might not necessarily be a startup insurance company that provides that solution. It might be an incumbent that releases a new innovation supported by their big balance sheet that can then help some of these newer technologies without the balance sheets to come to market. Definitely pointing to the need for partnering between startups and incumbents.
That's very interesting. Something I hadn't really considered, but it makes a lot of sense. Does anyone else want to weigh in on this, Melissa? I see yours.
Yeah, happy to answer the finance piece of the question really quickly. I mean, in recent years, there's been a bunch of crowdfunding platforms for climate tech specific solutions, just because of the difficulties of securing finance, from on the venture side in this vertical. And then I don't know if this answers your finance piece of the question, but I'm seeing decentralized finance or Web3 pop up in the chat quite a bit. And there have been solutions where you've got sort of communities pulling money together, or DAOs that are spun up specifically to fund climate-centric projects. There have been sort of play to earn crypto games where if you reduce your personal carbon emissions, you're rewarded on chain. Part of that is social. You can kind of see how you stack rank against your friends in terms of reducing your personal emissions. And so there's an interesting intersection with sort of decarbonization, personal finance, and also sort of collective finance as a trend.
Okay.
I think there's also an emergence of kind of these catalytic funds that blend capital with philanthropic sources, right? So foundations, staffs, kind of pooling capital, and then having that be a source of essentially concessional finance to, whether it's kind of early stage. Now we're seeing some announcements about capital that's targeted towards first of a kind types of projects. There's certainly concessional capital for deployment in kind of overlooked communities or kind of in the global south. So that's another area where I think there's a lot of entities kind of working on creating new products there. Oh gosh, there's a finance lab out of the UK, and I can't remember the name of it at the moment, but they've definitely been working on helping to create some of these blended capital instruments and create like a learning environment for these to come to market.
Yeah, hopefully a lot of those will become more mainstream and the money flows where it needs to. I want to be mindful of everyone's time. We have about 5 minutes left. So we're down to the final few questions. Sarah is asking, where will the next climate boom come from? If we're in climate 2.0 now, like what will spark like the 3.0 phase?
In my mind, it's just a switchover of the economic cost. We've already crossed over that in solar, but there needs to be other technologies that are cheaper than the alternative. Economics drives everything.
Thank you, Martin.
Yeah, and with that, I apologize because I do have to go. I have a hard stop.
No problem. Thank
thank
you
you
so
for
much for
organizing
attending,
this.
Martin. It was a pleasure. See you on one of the next ones.
Take care.
Bye.
I'll say on the climate boom, things that I'm particularly seeing are just a lot of interest around sustainable aviation fuels right now. And I think the innovations around purchasing, so advanced buying commitments for carbon removals or for sustainable aviation fuels or for kind of like clean electricity from the grid, that's already been done. But again, the idea of these kind of buyer consortia coming together, making these advanced purchasing commitments, that is driving a lot of innovation and a lot of opportunity for continued steps towards commercialization, even when the technologies themselves have a bit of a longer pathway to get to cost competitive without subsidies or without some type of premium being paid.
Thank you, Nisha.
I mean, I think yes to everything Nisha said. I also think with small modular nuclear reactors, we're finally getting to a place where it just makes sense on the economic cost curve, where you're producing kilowatts of energy for literally cents, and it's never been cheaper. There's a lot that excites me around like supply chain monitoring, predicting like, looking at companies' sustainability claims and figuring out if they're greenwashing or not. And I think in today's world, especially with Gen Z consumers, companies that have found greenwashing really, really take a hit to their reputation and sort of enterprise value as well. And so anything, like I've spoken to companies that will do verification claims for sustainability on the ledger, sort of backed by blockchain, and that's interesting too. But I almost in some ways think that the third wave of climate tech has already begun. I think we're just deep in conversations around like AI meets climate, but also the really pressing needs for energy consumption, new energy sources that data centers present. And so I think I feel like we've hit that new wave now, is my sense.
Okay, thank you very much, Melissa. Nisha, we're pretty much at the top of the hour. Thank you so much for your insights, and we'd love to see you on a future edition of one of these. I think this is a topic that we will keep discussing in some capacity. So happy to extend an invite to future editions. Everyone else, thank you for watching, and I hope you enjoyed this session. Bye, everyone.
Thanks, Niels. You did a great job moderating. Really appreciated it.
These are amazing questions. Thanks so much for your time.
Bye, everyone.